What is up? How's it going? Welcome back to another super exciting episode of How to Invest in Commercial Real Estate.
What's up?
And today's is a cool episode because we didn't have to come up with some topic. We have a guest on the show today, and we are super excited to introduce Shannon. Shannon Robnett is on the show, and he is with Shannon Robnett Industries, doing a lot in commercial real estate. And I always love having people on that do a little bit of different stuff than we do. I know right now we're big into retail, and Shannon is big into multifamily and industrial, I believe. But I'll kind of get out of the way here and introduce Shannon and allow him to kind of give his intro.
Hey, thanks, guys. Yeah, so I grew up in a real estate family and watched my parents, as a builder and a real estate broker, create a financial empire that allowed them to retire at 50 with different various assets. And so I kind of followed in that footsteps. I was a for-hire general contractor for a long time. And over the last 5 years, we've transitioned out of that, where we only self-perform our own multifamily and industrial projects that we build. We also have vertical equity under that SRI umbrella that does our fundraising and works with our investors on our different projects. And then we've also got property management that we integrate so that we can be vertical in our stack, from development of multifamily or industrial all the way through tenancy and continuing to maintain that asset and continue to collect rents on it. So that's kind of what we do. We do that from Washington to Florida. We currently have about $130 million worth of assets under management, and we're continuing every day to continue to build our portfolio for ourselves and our investors.
And you are based out of where, Shannon?
My office is in Boise, Idaho, which is where I've lived for the last 42 years.
Nice. So I've got a bunch of relatives up in Boise, so shout out to all the Renfros hanging out in Boise. I get up there, every couple of years or so, but very hot area, growing super fast. A lot of West Coast people moving in, which I'm sure has helped buoy your business there.
Yeah. It's hard to complain about the influx of people when that's what's necessary to drive my business. So I just keep my mouth shut and keep building.
I love it. Well, so you said that your family was kind of in the real estate space. And maybe I heard you say you started in general contracting?
Yeah.
Okay. Tell us about that. How did you start with the general contracting? Then how was the transition into, doing your own developments?
Well, I watched, I tried the college route, and right out of high school, went to college and watched my brother start building houses. And back in 95, he was making about 50 grand a year out of high school, no education, no formal education, and, just building single family homes. And I thought, man, that's easier than going to school, trying to figure this out. And so I started building single family homes. I quickly realized I didn't really care for homeowners. And so I transitioned into the commercial space. Those of you that have single family rentals or deal with that, you guys understand what I mean there. But when I did that, we built everything from schools and gymnasiums to medical facilities, city halls, police stations, fire stations. We've really kind of done the gamut. And every time I got done building a project, my paycheck stopped. And I realized that this wasn't the kind of passive income I was looking for. And along the way, I had started working with a lot of clients that would come to me before they had even bought their piece of ground, and we'd start designing something and start working through what they wanted and help that whole process. And then I also realized I can do that for myself. So back in 2001, I built my first industrial complex for myself, and poured every bit of capital I had into that, made myself very uncomfortable, robbed the company of all its funds to do it. I quickly realized if I wanted to do this more than once in a lifetime, I was going to need to start involving partners. And so I began to involve single check writers, and we would develop a project, and we would profit from that, and we would move on. And my last single partnership on a development side was a 180 unit apartment complex that started in 2017 that I did, where I partnered with a family office, and they wrote a $19 million check. And I quickly realized that if my business was going to get bigger, the chances of finding too many more people wanting to write a single $19 million check were going to get slimmer and slimmer. And so I took kind of at that time my development and my business into the syndication world, where we began to aggregate capital and do the things necessary there. And we've continued to develop. We've currently got 2 apartment complexes under construction, another one getting ready to kick off in 24 and another one in 25, as well as several industrial projects, one in Florida and then 2 more here in Boise for next year.
Man, that's great. We have done a lot of syndication. We've never done the single check writer, at least to the tune of 19 million. And so maybe that'll be something that we look at in the future. But that capital, it tends to be a little bit more onerous than some of the syndication capital. Is that what you found?
Well, I had a great relationship with the family office. They were amazing to work with, but you are beholden to them. And what I found was after our project there, the family office decided to retool what they were doing. And so I found myself without capital. And, you kind of put all your eggs in one basket. The good news is you got one person that's willing to write the check. The bad news is if they change your mind, or if they change their mind, they also change your whole business plan. And so, yeah, I completely agree with you there that it is nice, but it does get a little nerve wracking because you've got, this whole project is tied up with one person.
Yeah, your thought process isn't too much different than ours and what we talk about on our podcast, in that we like continuous passive income, right? And it sounds like that's kind of where you eventually felt like you wanted to get to.
Yeah, I watched it. I mean, like I said, in 2001, my parents retired on cash flow, and here 22 years later, their lifestyle hasn't changed because as things have gotten more expensive, so is the rent, and they live the same lifestyle today that they lived then. And so that's kind of everybody's goal, right? Is to get to passive income. And we just kind of do it a little bit differently because I would say 80% of the stuff we do is new, ground up. So we are the original value add. We're actually putting together the sticks and stones to build the project that then put the tenant in and create that initial value over and above expenses. And then, operating costs are obviously a lot lower on a new building. And so we kind of get to benefit from that as well.
And on your new ground up, you like to hang on to it, right? You're not trying to build it to maybe get a long-term lease and find someone else who wants to buy that property.
You're correct. We don't like to sell it, but as we all saw during the last couple of years, there were people willing to pay more than I was willing to put on the balance sheet to hold it. And, the nice thing is when you're doing ground up development, you can go build another one. There is another opportunity. And so you're not selling looking to buy somebody else's already stabilized product. And so, and a lot of my investors are looking for appreciation before cash flow. And so, I think that there are really 3 types of investors. There's those that are looking for cash flow. There's those that are looking primarily at tax advantages, and those that are looking for appreciation. They're starting out with $100,000 or $200,000, and they know that at some point they've got to get that to 2 and 3 million to get cash flow that's going to support a lifestyle. And so, most of our investors that are in our new construction developments are looking for that appreciation. We've seen deals do 104% in a 2-year period. We've seen stuff do 40%. So we tend to get a higher yield on the new construction. And then, when we do hold that, cash flow tends to be a little bit better because our expense ratios are a lot lower with the new construction.
So so in your bio, you say one of your bullet points of discussion was ground up versus value add and why you might have it wrong. Is that kind of what you're talking about there? Or?
Yeah. A lot of people, everybody likes value add. From a banking perspective, it's easier to get financing on a value add because the bank's looking at the underlying numbers of what it does today. That's what they're making their loan on. So if it's got free cash flow of $120,000, they're going to loan you something based on that number. And then you're going to go in and repaint it, put new deck chairs by the pool, change it from the Tropicana to the Flamingo, whatever it is you're going to do in your business plan. And you're going to increase that hopefully to $160,000 or $170,000 in NOI. And that's where you're going to create your value. But you're already starting with somebody else's value that likely bought it from somebody else that created value, that bought it from somebody else that created value. And so this retrade kind of takes a lot of the profitability off the table. Whereas when you're going in and building Class A new construction, you're coming in with, literally sticks and stones, and whatever it costs to build, that delta between where it comes out for value based on the rents that you're adding can be pretty substantial. And, on top of the fact that you have new product. And so we look at that and go, we'd rather maybe take 24, 36 months to build this product out and be in a better position on our equity side than to be looking for somebody else's value add that we then have to, rehab and do things like that. And it also kind of, it puts you in a much smaller field of those that are able and capable of doing that, because there's a lot of people out there doing value add that may not have a resume, may not have the balance sheet that will allow the banks to do a development loan.
Right.
No, that makes sense. We've seen the same thing. Obviously, we love buying existing shopping centers and multifamily units, but we've started our own developments, and it hopefully will put us in a much smaller competition class. Because most people, just in the smaller development we're doing, it took about $6 million of capital. And that prices a lot of people out unless they're able to get family office money or private equity money. And so, that's a good strategy.
Well, not only that, when you're looking at it, towns grow, cities grow. They don't always stay. What is the retail center today doesn't always stay that. There is the suburbs and the places that people want to be now that they didn't want to be then, where you can really achieve substantially higher rents than going into some of the old shopping centers. And you guys probably found this, that, you're bringing more equity to the table. You're getting, lower LTC, maybe LTV, but you're also positioning yourself to be a more solid investment. You've got brand new product. It's higher demand. You're not going in there trying to figure out what the last three tenants have been while you try and undo the third remodel of the second remodel. You're in there putting in new tenant improvements, and you're going with the businesses that are, moving into the area now. So you're really kind of dealing with, in a lot of cases, a more capitalized or a better class of tenant that isn't looking for, the cheap space that used to be next to the mall that's no longer vibrant.
Yeah, it makes sense.
Yeah. So what was another point on there? There's one about how to eliminate tax in your life. And we kind of beat taxes to death on the show because most people don't realize that taxes are literally their biggest expense and kind of in their lifetime as a whole. So, super interested in hearing your perspective on how to reduce or potentially eliminate taxes.
Yeah, specifically, another point on that is, you say eliminate tax from your life and have others pay for everything you want in life. Just wondering what you have to say about that.
I love that.
Well, everybody thinks about real estate as, a great way to eliminate tax, and it really is, right? But I take the Section 179 depreciation and use that in a different way. So I'm a pilot. I'm a third generation pilot. I love flying, right? But flying is, number one, it's expensive, and number two, it's really hard to get other people to pay for it.
Yeah.
And so what I did was I started a flight school, and there's a huge demand for aircraft for rent for people that want to learn how to fly. And so I created a flight school, and every year I'm purchasing one or two new aircraft, usually in the $450,000 to $500,000 range. I depreciate that through Section 179, so I'm allowed about $1.1 million in depreciation annually. And because I'm active in that business, I'm able to take that against my active income because I run the booking platform. And so I'm able to do that. So now I have 5 aircraft at my disposal on any given day, depending on the schedule, can fly anything from single engine to twin. And somebody else is out there making the payments on it because they're being rented 10 or 15 times a day, depending on which students are doing what. You can do the same thing with vehicles. There's a great app out there called Turo. You've always wanted to own a Lamborghini, but didn't want to be paying $4,000 a month for it. You can use Turo and use your Section 179 depreciation because it's an active business. Write the car off, lease it out, and enjoy it when somebody else isn't driving it.
I would do that in a second. I would do that in an absolute second. I don't think it would maybe take off in Tulsa. I don't think there's a big market for Lamborghini rentals in Tulsa. But the plane thing is super interesting. Yeah. I mean, starting a business solely to use the depreciation against active income, that is using the tax code to your advantage. And I think a lot of people are scared of that sort of creative thinking when really it's perfectly acceptable thing to do, I would think.
Yeah. Well, one of the busiest private airports in the country is 5 minutes away from here.
That's correct. And if you go there, you're probably lacking in aircraft for rent, right? That's one of the things that you can capitalize on. The other thing that
we're going to go ahead and get a plane, I guess.
Done.
Yeah. And there's a lot of ways to do that. But, to your point, most people look at the tax code as a penal code, right? You did this, you made money, so you owe. But if you really look at it as a guidebook on what you're supposed to do, there's so many other ways to build out things that are going to provide you with the things you want in life, that allow you to do the kind of things that you want and have access to the things that you want without being the one that pays for it and definitely not paying taxes on it.
Yeah. I love it. What else we got, Brian?
Well, one of the things, Shannon, we talk about a lot on here is we try to have some motivational topics and mindset type topics. And you said that one of your bullet points was maintaining a mindset that allows you to win in any market. What do you mean by that?
Well, it wasn't that long ago. I had a series of pretty traumatic physical problems. I blew out my knee. I had to have back surgery, 2 neck surgeries. I broke 3 ribs.
Damn.
All within about an 18-month period of time. And I found myself literally in a chair, right? I couldn't move and I wasn't able to participate in my businesses and things like that. And I learned at that time that if I let my mindset get negative, everything in my day was negative. When you're in the entrepreneurial space, all you are is a problem solver. And either you're looking at that as things that are beating you up and things that are causing you to not get to where you're going, or you're looking at those as steps on the ladder and problems that you're solving that will pay you and will build the future you want. And if you're really not in a space where your mindset is strong and you're able to really focus on what your goals are and why you're doing the things you're doing, you're going to find yourself struggling more to get the same things accomplished as if you're really taking the time to bulletproof your mindset and really understand that these are not problems that you haven't faced before. They may be a different color, a different size, and a different flavor, but they're still just problems to solve that get you that much closer to your goals. And when you really take that mindset of making sure that you're mentally available to take on these challenges, you're going to find that the whole thing shifts and you find all of this becomes an easier thing to do. And it becomes something that now is perpetuating you based on a positive mindset rather than a negative mindset that keeps dragging you to the bottom and making you feel like you can't win. All of that is based on your perception and how your mind is ingesting that information and what you're doing with that mentally before you actually kick out the solution.
I absolutely love that. We've talked a lot about that on the podcast. When you get involved in commercial real estate, and it doesn't have to be commercial real estate, it can be any entrepreneurial venture, life is going to throw you a bunch of problems, mainly because you lack experience in that field. You're new to it. And most people, that's where they want to tuck and run. But if you have this positive mindset of how can I win? How can I make this work? How can I buy this property instead of I can't afford it or I can't do it? Now you're giving yourself an opportunity to solve that problem. And if you do, you get to retain that skill indefinitely in your life, and you become a person that can solve problems. And that's going to make you good at a bunch of these ventures. And ultimately it's going to bring wealth and financial success into your life. Absolutely. So that's a great point, Shannon. I love it.
Yeah.
The thing that a lot of people forget is they pay hundreds of thousands of dollars to become a specialist at college, right? I mean, I have one of my investors is an oral surgeon. He had over $400,000 in college expense and spent 7 years doing it. How many of us as entrepreneurs look at the problems as education? We don't, but because we don't ingest it that way into our mind, we look at it as a problem instead of looking at this as, you know what, this is cash flow 101. This is, this is time management 305. These are college classes that we're taking in the School of Life. And if you're looking at it like that, it tends to help you look at things a little bit different. And like you said, look at this as one more tool in my toolbox that's going to get me to the future that I want.
Yeah. One of the first apartment complexes that my business partner and I purchased, obviously we didn't know what we didn't know, and we kind of got swindled on the numbers, and we ended up not making any money, and we started losing money, and we ended up having to fire sell it, and we lost, I'll just guess at $50,000. And to us at the time, that was a year's salary. That was a huge number. But because of the mentors that we were reading, that caused us to say, hey, this was just like a college education. People pay $30,000, $40,000 for college. We paid it for a real good lesson in how to not get scammed in buying apartments. And to go back to your point, it's all about thinking about these prerequisites. And I was an engineering major, so there's a lot of high level math, and you just can't jump to differential equations or to calculus. You've got to take the base classes. And that's what your entrepreneurial journey is going to be like, is you're going to get involved and you're going to make mistakes and you're going to have these mini failures, all because you don't have something that you need to help you be successful in whatever venture you're at. And so those little failures are your prerequisites, and they're going to teach you the things that you are lacking today in order to help you be successful down the line. And so the optimism is so important because now you're going to see every adversity, as Napoleon Hill says, as an opportunity, as a seed of an equivalent benefit that's going to propel you down the line. And if you can have that kind of mindset, there's no one that's going to stop you. You're not going to, be able to be stopped. You're just going to, every failure is, I learned more. I'm going to be better. I'm going to be, stronger. So.
Yeah, and I think there's maybe a misconception that you have to go out and have all of these failures, or you have to go get a college education. You can go get a mentor or work at your dream job or your dream company and watch all of the failures and that business growing, and that should be teaching you something. I mean, we can learn from everyone else's successes and failures. You just have to be paying attention.
I'm sure, Shannon, your investors that are you're syndicating deals with, I'm sure they're learning through every deal, and they're not having to make all the mistakes on their own. So that's a good opportunity for people listening to the podcast, is get involved with a little bit of money. And as the saying goes, put a little money down and the knowledge and experience go up. And you can get a lot of the failures out of the way doing it that way.
And, I've told a lot of my investors, if you want to know how to do what I do as an investor, all the numbers are available. Everything that we do is available. Monthly newsletters keep you up to date. Job site visits are available. We have cameras on our job sites. And I have a couple that I can tell you right now, they are planning to do their own projects. I can tell because of the questions that they're asking, the frequency that they're getting involved. And, just like you said, you can either go through that mistake and lose that 40 or 50 grand, which I'm going to bet you probably haven't even come close to making that mistake a second time, because those are expensive. And you want to get your money's worth, but you don't want to have to take the class again. But, you can also work with people that are doing what you do. People ask me, what's the one thing you'd tell your 25-year-old self? And the one thing I would tell myself is go get that job. Go to work for the guy that's doing what I want to do. And there was 2 guys in town that I could have gone to work for, and I would have learned so much. I would have been making a lot less during those first 3 or 4 or 5 years. But the trajectory that I would have been able to put myself on based on that 3 years of working with them would have paid dividends. But in my youth, I wasn't able to see that a mentor is a good idea. Working for somebody and figuring out how their system works before you go out there and try and build your own from scratch is definitely something to do.
So one more thing before we call it quits today, that reminds me, Wolf of Wall Street, one of my favorite movies. What does the guy do? He meets this guy and he's like, how much you make last month? And the guy's like, I made 70 grand. He's like, you made 70 grand last month? He's like, yeah. And he's like, if you show me a pay stub right now, you make 70 grand, I go to work for you right now. And I love that, because that's what a lot of people should be thinking when they come across someone super successful, is how do I go to work for free for this person to learn what they learn, even if I don't get paid, because of the benefit of the experience and the knowledge that's going to help you down the line. So Shannon, how can all the people that catch this podcast, how can they connect with you? How can they get on your newsletter? And how can they have a chance to invest with you? Give us some websites or some things that you want them to know.
We keep it really simple. If you just go to shannonrobnett.com You can find access to all my social media. You can sign up for the newsletter. I've even got access to my calendar if you want to make an appointment, chat, figure out where you're at in your journey, and give you some insight on what steps you might want to take next. But that's just shannonrobnett.com.
All right, we will post that link in the description of the podcast, so everyone's going to have that. Shannon, I thought it was super insightful. Congratulations on your success. It sounds like you're doing it the right way. Hopefully, we can maybe do a project in the future, or at least stay in touch.
Yeah, absolutely. Thanks
great,
for coming
guys.
on, man.
Thanks for your time today.
Yep.
Appreciate it.
Awesome. Shannon Robnett, guys. Check him out.
All righty. We will see you next week on how to invest in commercial real estate.